All right, now my next guests have a difficult act to follow as we take a serious look at the soaring demand for gold. All right, following Mr. T, maybe we'll give them some gold necklaces. Will prices continue skyward, or is there a correction on the horizon? We've got some experts. George Giro, he's the vice president of global futures at RBC Capital Markets, and also Jeffrey Nichols, he's the senior economic advisor to Rosalind Capital, also managing director of the American Precious Metals Advisors. Gentlemen, good to have you with us.
Good to be here.
What do you think? Do you think you can follow that, George?
Oh,
Jeffrey?
It's going to be very difficult.
Well, I mean,
by the way, Jeff and I have something in common where we were both, I'm still associated with the International Precious Metals Institute.
That's true. That's true.
Well, before we get to that, I mean, does it strike you, though? I mean, I always get these questions, and in fact, many people were emailing today when they found out that Mr. T was going to be on talking about gold, Jeffrey, that it is a popular phenomenon now, that you have so many people, advertisements, commercials, all talking about gold. Does that give you a little concern?
Gold is still very much underrepresented in portfolios, both of individuals and institutions, and around the world. China, India, North America, Europe. Participation is very low. One of the reasons why I think gold has a lot of room to move in the longer run is because of new players coming into the market over the next couple of years.
Perhaps people with new money that they want to actually move into gold. George, does this mean, though, that we're going to get any kind of correction between now and this long term that Jeffrey speaks about?
We can have a sudden correction anytime, and that sudden correction could come because of different currency agreements between either G20 or the IMF or ECB members. In fact, the ECB could sell gold at any one time so that they may have to use that money to bail out maybe one of the Western countries that's in trouble in Europe.
But if they do that, is there a deep enough, a liquid enough market to absorb the sale of, let's say, gold from the European Central Bank?
Oh, we believe so. I mean, last year, the ECB in the gold pact was able to, if they wanted to, sell 500 tons last year in September, but some member banks did not wish to sell and did not partake. In fact, some banks actually bought gold to bolster their currencies. So we have this phenomena of a low dollar because of low interest rates, and because of that, gold and other commodities are at a world discount. So yes, we are seeing a lot of interest in all commodities because of the weak, cheap dollar.
All right, we're going to talk about some of those, but Jeffrey, I want to get your thoughts here, because if the U.S. dollar continues to weaken against major trading partners' currencies, does this, in a sense, inflate the value of gold? Because, I mean, after all, it's traded in U.S. dollars.
I think what's happening really is that both gold and the dollar are reacting to the same underlying forces, principally the direction or anticipated direction of U.S. monetary policy, and the expectation that in the next month or the next few months we're going to have more quantitative easing and possibly targeting of a higher inflation rate or a higher nominal growth in GDP, which would be a significant change in Fed policy from what we've had in the past.
So can we lay this bull rush in gold at the feet of Ben Bernanke?
I think in the last few days, yes. But remember, it's a much broader market than just the U.S. and U.S. monetary policy. The Chinese have been very big buyers in recent weeks. Activity on the Shanghai Gold Exchange volume has been up sharply. And also, believe it or not, India has been taking significant quantities. Usually they don't do this on price rises, but in the last few weeks it's been quite strong. And that should continue at least for the next month with some significant festival and wedding periods on the Hindu calendar.
All right, well, we're going to continue our special look at gold. We've got more with Jeffrey Nichols, more with George Giro. How much higher can gold go, and what would a high gold price do to the U.S. economy? Is there a connection? We'll find out. And also take a look at the week ahead in business with Bloomberg Business Week, 7 days. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. I'm Pimm Fox. So where is gold heading? We've got our special report. It continues. My guests are George Giro, Vice President of Global Futures at RBC Capital Markets, and Jeffrey Nichols, Senior Economic Advisor to Rosalind Capital, also Managing Director of the American Precious Metals Advisors. Gentlemen, we're talking about some new products that are coming onto the market that really are a response to the popularity of investing in gold.
Yes, by institutions. And because of the institutional demand, there are two dynamic new products coming from COMEX on the 18th of this month, which will be a VIX, which is
a volatility
index on gold, and a VIX on crude oil.
And why do institutional investors want these kinds of products?
The institutions like to hedge both their long positions with options and with volatility indexes. And that's very important for an institution to be able to risk manage. And risk management today is the key to all major institutional business. So you'll see a lot of institutional interest develop. And then for the hedger who doesn't have all that large millions, but is either a coin dealer, coin collector, or buying small amounts of gold or gold coins, we have the 10-ounce micro contract. And if you have 10 of those contracts together, you can turn it in for 100-ounce gold bar, exactly the same as the COMEX 100, which is IAU, an ETF that also delivers the COMEX 100, or 400 ounces, which is the GLD, which is the World Gold Council's most popular and biggest ETF.
Jeffrey, does this mean that other investors all over the world, whether they be located in China or indeed in Europe, they're now just going to have more opportunity to invest in gold and it feeds on itself?
There is more opportunity. One of the things I've talked about a lot in the last few years is the evolution of the gold investment infrastructure, the development of new markets and new products around the world that make it more accessible for more investors to enter the market, both small-scale retail investors who might buy coins or small bars, as well as institutional investors who are going to buy large bars or may be more interested in ETFs. But definitely this is bringing more players and is raising what I would call the long-term equilibrium price of gold.
And when you talk about the price of gold, I have to ask you, by the end of the year, by December 31st, do you have any idea what the price of gold might be?
Well, I really want to hear Jeffrey's take on that one.
Well, ever since I've been on your show, I've been talking about $1,500 by year end. It looked a little maybe questionable to some when I first mentioned that, but today it doesn't look unusual or unreasonable. We're counting on gold rising to the vicinity of $1,500 late this year, and in the next several years, 2,000 followed by 3,000 and maybe still higher. Importantly, the next low in the gold market after we go to such heights will probably be well over $1,000.
George Giro, what are your thoughts? I give you about 30 seconds here.
December will be the biggest month in COMEX as we have to roll over maybe 400,000 plus contracts into either February of next year or April of next year. And by the way, we've seen business in 2012 and 2013 and 2014.
And when you say business, you mean people buying contracts for future delivery?
And rolling them into those longer-term deliveries because people want to be in gold for the longer term. That is underpinning the market now. As far as price, we'll see if it's 1,500 or 1,300.
All right, somewhere in between.
In between.
All right, well done. George Giro, RBC Capital Markets. Jeffrey Nichols, always a pleasure at Rosalind Capital. Thanks very much for your insights into the precious metal gold. Coming up on Taking Stock, Starbucks customers, they're going to find out that if the double latte is worth waiting for, they now might have to actually wait a little bit longer. We're going to give you the details. That's next on Taking Stock.